Kitco Mining's special coverage of the Deutsche Goldmesse is brought to you by Defiant Silver.
Bunker Hill Mine in Idaho has environmental challenges, but those environmental challenges are becoming an opportunity for the mine operators. I have with me Richard Williams. He's Executive Chairman of Bunker Hill Mining. Richard, welcome to Kitco.
Thank you very much for having me.
Let's start with the opportunity at Bunker Hill. What is it? What's the mine?
The mine is a closed mine site. It closed in 1981 because primarily it wasn't meeting the environmental standards that were set by the Clean Air Act, the Clean Water Act, and the Environmental Protection Act over the preceding decade. And it wasn't the mine, it was the smelter really that was most damaging. And then since then, in 1981, the smelter was dismantled, all the processing facilities were dismantled, and the valley, which had been damaged by mining, was completely restored, beautiful forestry, and so on. But the local economy obviously devastated by the collapse of the mine. But the mine had left behind it at that time 12 million tons of reserves as classified at that time in 1981, and a significant amount of infrastructure. As with all closed mine sites, it was generating acid mine drainage that needed to be cleaned. And the Environmental Protection Agency ran a very efficient water treatment process for that and charged the owners of the mine, because it went from one owner to another, for that service, which unfortunately the owners of the mine didn't pay. And so when most people, and again, you're quite right to point it out, look at Bunker Hill Mine, they say they have environmental challenges. In fact, they don't have any environmental challenges because it was all tidied up and the water is managed. However, the company or the asset owes money to the United States Environmental Protection Agency for unpaid water treatment. So the opportunity is for us, having now bought the mine, we are now the owners, we did it at the end of last year, and classified those old historical reserves to modern 43101 standards, is to get the mine back into production in partnership with the EPA, settle the outstanding at $17 million or so due to them now over a period of time once the mine's in production, and then use the early cash flow that comes from that to unlock the mine's potential that its owners back in 1981 valued at that time at over $1 billion. So if we can get the asset up and running, which we intend to do by the last quarter of next year, and reinvest the cash flow generated, net of the obligations to the EPA effectively, we can unlock a very significant silver, zinc, lead mine in a wonderful jurisdiction in North America, and restore to the local community jobs and opportunities that have clearly been frozen since 1981.
Richard, being able to work with the EPA, what you've seen is that this is a type of model that might work for other projects.
Yes, we do. And again, government agencies, particularly those that are born from a very serious law like the 1969 Environmental Protection Act, have got a very serious job to do. And following that, the passing of that law, there was a lot of tidy up work that needed to happen through not just the mining industry, but other industries too. And they take that exceedingly seriously. But there isn't a mining company on the planet nowadays that we would recognize as investable that doesn't take the management of the environment seriously. So when discussing this with the United States Environmental Protection Agency, the office that covers the Bunker Hill Superfund site is located on the mine site with us, really, but the actual head office is in Seattle. Every single member of that agency that we spoke to was aligned with us in the need to ensure the environment is protected. There wasn't any difference whatsoever, nor would there be, I imagine, for any other mining company. But they clearly had been in dispute with the owners of the mine over a number of things, as is often the case in these dramatic transitions. Big industry, collapse, tidy up, the agency that forced the collapse is unlikely to be loved by those that suffered the collapse. Lots of tension there. But what we found is when we proposed to them a sustainable restart of a mine, very, very low footprint, benefiting from things like the green energy from the Pacific Northwest power grid, putting all our tailings underground for as long as within the mine life that could be sustained, employing people locally and enhancing the quality of the water by our own means and other environmental things, they found that they had a partner, again, not uncharacteristic of other mining companies, but they had a partner on this particular site that was very different to those that had gone before us. And so it occurred to them and it occurred to us that if we're able to restart Bunker Hill Mine in a Superfund site, it'll be the first time that's been done since that law was passed in 1980. Then there may be other mining opportunities throughout the United States, closed mine sites that we could bring back into production too, pending economic analysis, pending environmental and other analysis in the same way. And the advantage of some of these closed mine sites is not all of them, but they're on private land and they have intact mining permits, or mining permits that are in abeyance pending an environmental review. And one of the big challenges in North America, as every explorer or developer knows, is the timetable to get in a tier 1 jurisdiction, such as Canada or United States, a permit for an operating mine can be exceedingly long. There are numbers like 15 years or 20 years to bring a mine into production from exploration. And so we feel that as others have done too, that a very solid working relationship with the EPA in the Bunker Hill site will be very good for that business, but can also generate opportunities elsewhere in North America that our particular model of sustainable mining, which isn't unique, it just takes some best practice copied from others, could yield some very interesting strategic opportunities.
We were talking yesterday, and you said, interesting, you like the zinc space. Why?
Well, there's a number of reasons. Firstly, the inherent value of the metal in terms of a commodity cycle that is being driven by green energy, a wish to upgrade infrastructure. Zinc contributes to both of those directly. And a current view, which I think will endure for some time and maybe infinitely, wish to reorganize the global supply chains so that, say, the Western Hemisphere, if we call it that, there's so many different ways to describe it, is less dependent upon the Eastern Hemisphere for its supply of metals. Now, to picture that adjustment is a very complicated story. But when you look at North America and you say, what North American or South American or in that continental area, what zinc projects could exist, there are a number of them. And there are a number of other zinc developers, which combined could produce, a very interesting North American company.
Your background was with Barrick before. You've developed a bit of a skill set, I think, that you've taken to Bunker Hill from your past when you're dealing with the Tanzanian government.
With the Tanzanian government, yes. I mean, there were a couple of things that one learned at Barrick and developed at Barrick with the people there that have been useful at Bunker Hill. Tanzania, I'll talk on that first, Tanzania was a very complicated and stress dispute between a government and the owner of a mining license, or the mining operator in Tanzania. And it was a great shame that it got to that particular point. But Barrick, unusually, as the largest shareholder in a operating company known as Acacia that was listed on the London Stock Exchange, became involved in negotiating with the government a solution to that dispute, which it achieved relatively quickly. which then allowed both the Acacia shareholders and the Barrick shareholders to secure a future for those assets in a country that was at that time, very concerned about that company and its future. So one learned quite a lot through that, and the complex negotiations with governments that are concerned. It's not quite the same as complex negotiations with the EPA. We're in this. It's in so many respects. That's a sort of a simpler thing. But taking the time to understand each party's history and point of view before one proposes anything, so we really do have alignment on things is an important part of it. So that was important at Barrick. The other thing at Barrick we had to do, because I arrived there and worked with the operations team as its chief operating officer to, optimize the assets and optimize the portfolio so we could maximize cash flow. And we became bear market miners, really focused on margin and cost and looking for those type of savings wherever they could be found. And a great team of people, all of whom I can remember, some of whom are now working with me at Bunker Hill, were involved in looking at assets in ways that didn't presume a bull market for the commodities. So it was really careful on cost, really careful on allocating capital. And so when we came to Bunker Hill, it's no surprise that when we looked at it, we're looking at a restart that has the minimum amount of pre-production capital, really focused on costs, because we want this mine, an underground mine, 1,500 to 2,000 tons a day, to be operating in the lowest quartile of the zinc cost curve, which is where we estimate it can be. And we believe both Bunker has the ore body geometry and infrastructure to enable that. But we also believe that from what we learned at Barrick, as many other miners have learned in downturns, that if we can be as disciplined as we became there, then we've got a good chance of success at Bunker.
If you're looking at another company, another junior that perhaps you're going to invest in, help out our listeners, help out our viewers right now, what would be the model that you would use for doing an assessment in terms of whether they've got their ESG up to spec, that they're actually going to be having a sustainable business wherever they're located in Canada or they're located in Africa? Okay,
focusing on the ESG dimension, it's a good question. But what's interesting at the moment with it, if I firstly answer that in this way, is that all mining companies, modern mining companies, that's over a long period of time, will only retain their social or their real license to operate, their legal license to operate, if in the first instance they're totally compliant with all of the license regulations as specified, and the other regulations outside. The first thing you have to look at. And the second, they have a investment. No, that's the wrong way to look at it. They have an attitude or a culture that looks at their workers, the community, their contractors, in ways that see the relationship between all of that as a genuine asset, so that they can bring communities, workers, contractors, governments along with them when inevitably things go wrong. So when you're looking at an asset, you're genuinely trying to look through the inevitably well-written presentational promises that are made in PowerPoints and websites and elsewhere, and really get under the skin of the attitude of the people that are managing those relationships. So there's law and regulations, and then there's attitude. And it really isn't just the people on the ground. It's how that company has been allocating capital, because we're in the business of mining to make money, but making money sustainably. So how much of every dollar is allocated to ensuring the mine is sustainable and how much risk is carried by investments that aren't made. And it's for each asset, it'll be complicated and it'll be different because every mining company has to take risk because we aren't, capitalized to solve every problems, and we're in the business of making money. And it's a question then at the final analysis is when you've analyzed the difference between law, or you analyze the law and the regulations and the people and the attitude, you've then got to go in and say, where are they carrying risk and what are they doing to mitigate it? And it's quite a lot to look at.
Finally, Richard, milestones over the next 12 months at Bunker Hill.
Okay, Bunker Hill, our aim is to be in production in the final quarter of next year. Right now, at Bunker Hill, we are moving a processing plant that we have bought from Teck in their Ponderay mine, 140 miles away, to the Bunker Hill site. Right now, we are connecting the upper levels of the mine above the water table, current water table, to ensure that we can mine them with rubber-tired access as we speak right now. We will be issuing our restart PFS over the next few months for the part of the mine that we're going to be starting to work with, which is the M&I resources, primarily above the current water table, but not exclusively. And so if you're watching Bunker Hill Mine, you're going to be seeing a mine going into production, and the news feed for Bunker Hill Mine will be associated with a series of construction steps on budget to that particular outcome. The really big capital investment that we've got to do is moving the plant from Ponderay and putting it into position at Bunker, where part of it will be underground, primary crusher, and the rest will be on the surface within a facility that already exists today that just needs to be modified. That is, like all plant movements, and there are many that have done it before, is a complicated business. You've got to get 100% right. And we've got a good team and a good team of contractors helping us. That's the primary thing. But you'll also hear news feed about paste plant. You'll hear news feed about other underground development work. And then really what you're really going to be interested in is, are they managing to mine in that low cost threshold that they've all been talking about and deliver product at the rate that Bunker Hill can? Because with that, what will end up being positioned is no longer valued in that terrible dip in the Lassonde curve before you get to production. Will be valued as a multiple of our earnings, and that's where we want to be. So you're going to see all of that happen over the next, it's under 18 months now actually, between now and the end of next year.
Richard, keep us up to date.
Thank you very much indeed.
He's Richard Williams. He is Executive Chairman of Bunker Hill Mining. My name is Michael McRae, and you're watching Kitco Mining at Deutsche Goldmesse here in Frankfurt, Germany.
Kitco Mining's special coverage of the Deutsche Goldmesse is brought to you by Defiance Silver.